One of the biggest AI hedge funds trades just revealed something very important. A major AI focused hedge fund called Situation Awareness just opened billions of dollars in put positions against semiconductor stocks like NVIDIA, AMD, Broadcom, TSMC, Taiwan Semiconductor, and even the semiconductor ETF itself, SMH, VanEck Semiconductors, while still maintaining exposure to AI infrastructure. And that may be telling us something very important about where the AI market is headed next. Because AI may no longer be just a chip story, just like all the other videos we've been talking about. It may be evolving into a full infrastructure story. Today, we're going to break down why smart money may be hedging semiconductors, why AI infrastructure spending could still continue, why power, optics, cooling, and networking may become the next battlegrounds, and which companies could potentially benefit if AI trade starts moving deeper into the stack. For the last 2 years, AI has mostly been about one thing: GPUs. And NVIDIA became the center of the AI universe, and for good reason. The company completely dominated the AI accelerator market, while hyperscalers rushed to build AI data centers at historic speeds. But now the market may be entering phase two. Phase one was chips. Phase two may become infrastructure because AI is becoming physical. It needs massive power systems, cooling infrastructure, advanced networking. It needs optics. It needs memory, networking, packaging, fiber, and entire data center ecosystems. The scale is enormous. Some analysts believe AI related data center electricity demand could more than double over the next few years. We're already seeing hyperscalers commit tens of billions of dollars into AI infrastructure expansion. Microsoft, Amazon, Google, and Meta, all collectively AI capex projections are beginning to resemble industrial buildouts more than traditional software spending, and that changes the investing landscape dramatically. Now, this is important. Hedging semiconductors does not necessarily mean that AI is over. It may simply mean that expectations have become simply too large. NVIDIA became one of the most valuable companies on earth in an incredibly short period of time. And at some point, the market starts pricing in perfection, and that creates risk. Even incredible earnings may not always be enough if expectations become unrealistic. And hedge funds understand this, especially in markets where valuations stretch, positioning becomes crowded, and volatility increases. So, what may be happening here is not that AI is dead. Instead, it may be AI is getting more complicated. The market may be asking a different question now. What happens if AI infrastructure spending keeps rising, but the semiconductor multiples compress? That's a completely different environment than what investors saw during the AI boom. And if that happens, then the winners may start expanding beyond just GPU companies. So, as you can see, there was an $8.45 billion hedge put on NVIDIA, AMD, AVGO, Taiwan Semiconductors, and the semiconductor ETF. So, where's the smart money going? AI factories are starting to resemble mega projects. These facilities need substations, transformers, power generation, cooling towers, liquid cooling systems, fiber optic networks, and massive server clusters. Some hyperscale data centers are expected to consume as much electricity as small cities, and that's creating bottlenecks everywhere. You have power bottlenecks. You have power bottlenecks, bandwidth bottlenecks, You have cooling bottlenecks, liquid air technologies, memory bottleneck, massive scale deployment, and networking bottlenecks. And every bottleneck creates potential opportunity. This is why the AI stack matters so much. You have chips, memory, networking, optics, cooling, power, and data centers. And every layer becomes critical. And as AI scales globally, every layer may see enormous investments over the next several years. This is one reason many investors are now looking just beyond NVIDIA or beyond just NVIDIA. All right, so let's break this down by infrastructure category. First, there's power. You have names like Vistra, GE Vernova, Bloom Energy, Oklo, and even Iron have started entering more AI infrastructure conversations because without power, AI expansion slows down. Then you have optics and bandwidth. AI clusters require massive data movement, and that means networking optics may become critical bottlenecks. Companies like Applied Optoelectrics, AAOI, Lumentum, LITE, and Sivers, SIVEF, have gained attention because of growing demand for high speed optical systems and AI networking infrastructure. Next, you have memory and packaging. AI models are also becoming increasingly memory intensive. With HBM, high bandwidth memory, demand continues rising rapidly. Advanced semiconductor packaging is becoming another critical layer in the AI ecosystem. Companies tied to packaging, inspection, and advanced semiconductor manufacturing may potentially benefit if this trend continues. So, the major leader is Micron, and then you also have Coherent and Camtech. Then you have cooling. Cooling. This is another area that could become increasingly important. And as rack density increases, heat becomes a serious problem. And that's why liquid cooling and advanced thermal infrastructure are becoming major discussion points throughout the industry. AI is no longer just about computation, it's becoming an entire industrial ecosystem. And the leader in cooling is Vertiv. You also have Modine. And then you have where the money may flow next, AI infrastructure stack, where AI is expanding. Demand is moving beyond chips into full infrastructure. You're going to have multiple bottlenecks. Every layer is critical and capacity is limited. Billions in capex. Hyperscalers are investing hundreds of billions of dollars. And then new winners emerge. Value shifts to infrastructure enablers. So now let's talk about the risks, because there are risks and there are a lot of risks. What happens if companies overspend? What happens if AI monetization takes longer than expected? What happens if utilities can't keep up? What happens if hyperscaler capex slows down? What happens if infrastructure gets overbuilt? History shows that major technological revolutions often create periods of excessive investment. From railroads to fiber optics to telecom to the dot-com infrastructure, sometimes the long-term trend is correct, but individual companies still struggle. And that's why selectivity matters. Not every AI company is going to win. Not every infrastructure company is going to succeed. And some parts of the market may eventually become overcrowded. And that's something investors absolutely need to keep in mind. So here you have the AI spending explosion where you have CapEx is $600 billion and growing. The power costs are up 200%. Utilities are strained. Cooling's at a limited supply. Debt loads at record level. So the boom has real risks. AI infrastructure boom could create trillions, or it could also be trillions in waste. And you can also see growth is not a guarantee, as NVIDIA, SMH, ETF, AVGO, and AI Infra ETF are all down at a certain percent. So the next phase of AI may not belong exclusively to the semiconductor companies, as it may expand into power with companies like Vistra, GE Vernova, Bechtel, and even Iron. You have optics with AAOI, Lumentum, and Cybers, networking with Arista, Marvel, and Broadcom, cooling with Vertiv, memory with Micron, and data centers with basically Iron. Because AI is moving from digital excitement into real world deployment, and real world deployment requires physical systems. And that's why this hedge fund positioning is so interesting. Smart money may still believe in AI long term, but they may also believe the market is entering a more complex phase where infrastructure becomes just as important as the computation itself. And if that's true, the next AI winners over the next 3 to 5 years may look very different than the winners from the last 18 months or the last few years. So if you enjoyed this video, make sure to like and subscribe. And if you want access to the visuals from today's video or any other videos, AI infrastructure charts, ecosystem breakdowns, and portfolio research from this video, check out Buy Me a Coffee link below. And I've been uploading all visuals into the gallery section for members, so everything can be referenced in one place. And let me know in the comments, which layer of the AI infrastructure stack do you think becomes the biggest bottleneck over the next few years? Power, cooling, networking, memory, or something else entirely? And appreciate y'all watching the videos, and we'll see you in the next one.